Don't wait until the stock market's recovered to start investing. Here's why. You often hear people say that bull markets last longer than bear markets. Well, that's true. Over the past 100 years, the average bear market, where the market lost 20% or more of its value, has lasted around 10 months. Meanwhile, bull markets last around 4 years. So at first glance, you may want to wait until we're back in a bull market to start investing, right? Well, that statistic only tells half the story, so let's look at this slightly differently. A bull market is the period of time after the bottom of the bear market up through a new high price. A common mistake beginner investors make is that they wait until the bull market is hitting new highs before starting to invest. But they'd be waiting a long time. In fact, the stock market only spends 28% of the time making new highs. That's about 15 months per market cycle or less than a third of our average bull market. So what about the other 72% of the time? The market is either falling or recovering. In our opinion, this is why it's extremely important to learn how to invest in any kind of market, bear markets included. You're never sure when or where a bear market will end, and if you wait until the market's recovered all of its losses, you'll be missing out on the majority of the best periods in the market. If you want to learn more about how to handle investing in that 72% of the time, join us for our free webinar on the topic today at 4 p.m. Pacific, 7 p.m. Eastern. Link is in our bio.